Hello everyone. In this video, let's discuss about what we can expect next week, a week ahead video for November 1st week 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Last week, Nifty snapped its 4-week gaining streak, decreased 0.3% and Sensex also decreased similar percentage. However, mid-cap and small-cap outperformed the main indices. Mid-cap increased 1% and small-cap was up by 0.7%. So the broader market was okay. The week started off very good. On Monday, Nifty managed to close about 26,000 mark after more than a year. But however, it could not sustain. On Thursday and Friday alone, Nifty fell about 330 points and dropped to near 25,700 mark. Sector-wise, oil and gas, metals, capital goods and public sector unit had a good week, whereas auto, banking, IT and healthcare were the draggers, that too less than 1%, not too much. Then about institution, in the cash market, no surprise, FIIs turned back as net sellers, while DI continued their net buying. Out of 5 in 4 sessions, FIIs were net sellers except on Tuesday, monthly expiry day, where they net bought for over 10,000 crore rupees. But on weekly basis, they net sold more than that, approximately 2,100 crore rupees, which then translates on an average for every session, they net sold for 420 crore rupees. However, the important thing is, if we see for the whole October month, based on NSE preliminary data, FIIs net sold only 2,400 crore rupees. Then moving to DII, in all 5 trading sessions, they were net buyers. On weekly basis, they net bought for near 18,800 crore rupees. So on an average, they net bought for 3,760 crore rupees each session, which is significantly higher than their usual average and significantly higher value than FII. And for the whole October month, DII net bought for 53,000 crore rupees. Now moving to earnings. Last week, the earnings have been decent so far, with the majority of the companies managing to beat or meet the analyst expectations, and most companies reported strong sales growth. And more importantly, the most management commentary were very positive that they are expecting very good second half kind of. Now, this coming week is a truncated week. Wednesday, November 5th is a trading holiday for Guru Nanak Jayanti. So, we have just 4 full trading days. And regarding the earnings season, major companies such as Airtel, Titan, M&M, Ambuja Cements, Adani Ports, Adani Enterprise, Sun Pharma, LIC, Bajaj Auto and Hindalco all are scheduled to report. So their management's commentary regarding the demand and future prospects will be the major driving factor for the market this upcoming week. Then second, globally last week, US Fed cut the interest rate by 25 basis points, which was as per most analysts expected. However, the commentary was a bit hawkish with uncertainty on the timing of the next rate cut. And Trump had the meeting with China and he got some sort of the agreement for the rare earth mineral deal by reducing the US tariff on Chinese goods to 47% from the present level 57%, which all a bit of neutral to negative. But somehow US market managed to close on the positive note. On the weekly basis, all the 3 major index increased around 2%. One more thing, US government shutdown is still continuing and it's more than a month now, which is very alarming to me. And don't know why US market is just ignoring all the negativity. Indian market is just seeing all the negativity. Anyway, the takeaway is global momentum is good despite all the fundamentals telling a different story. So for now, okay, but look for reversal anytime. Third, during weekend, most Indian auto manufacturers released their October month car sales data. Because of the GST 2.0 reform boost and the festive demand, the passenger vehicles wholesales increased 17% year on year to 4.7 lakh units, which is the best ever monthly sales volume. If required, please pause and have a look. Year over year, Maruti Suzuki sales increased 10.5%, Mahindra grew massive 31%, Tata Motors increased decent 27%, and Toyota was the major gainer, was up 43%. On the top 5 companies, only Hyundai declined 3%. So overall, auto sector performance was excellent, and this expects to influence the price on the auto companies. More importantly, it shows how much the consumer demand increased due to the GST reform. And in fact, despite the GST reduction in the majority of the goods, the GST collections is good. India collected 1.96 lakh crore rupees in gross GST in October, about 5% more than the same month last year. However, I think this is just Diwali related optimism. So the full impact of the tax cuts on state revenue will only become clear in the next month as taxes are collected with a lag. But from the market perspective, the higher gross GST collections reflect a strong festive season and higher demand. It is a positive indicator of how both consumption and compliance are moving in the right direction, which is good for the economy and stock market. So, in summary, three things are to drive the market this upcoming week. First, major companies' earnings results. Second, this positive consumption data from auto sales and GST collections. And third, global cues. For the moment, it's okay as Trump is busy in constructing a ballroom in White House, and let's hope he's busy throughout the whole week. Now, let us see day by day what to expect in terms of earnings and macros. Starting from Monday, November 3rd, earnings wise, Ambuja Cements, Airtel, Power Grid, and Titan are scheduled to release their results. So, cement, telecom, and consumer sectors will be on focus. Macro wise, in the afternoon, Europe manufacturing PMI for October is due, expecting it to come at 50. So, as long as no surprise, we don't need to worry about this. Moving to Tuesday, November 4th, earnings wise, SBI, M&M, Adani Ports, Adani Enterprise, Indigo, Indian Hotels, Paytm, Switzerland Energy, and Berger Paints are scheduled to release their results. So, banking, auto, infrastructure, and hospitality sectors will be on focus. Macro wise, during our market time, India's October month manufacturing PMI is due. In October, it rose to 58.4 from 57.7 in September, which signals substantial improvement in the manufacturing conditions. So, expecting similar reading. On the IPO side, Grow IPO will be open for subscription and closes on November 7th. The price band is 95 rupees to 100 rupees per equity share. The issue size is significant, so we could expect some impact on the market liquidity. Coming to Wednesday, November 5th, our Indian market will be closed for Guru Nanak Jayanti. However, earnings wise, Sun Pharma, Grasim, Arabindo Pharma, Blue Star, Delivery, Motherson, and Ramco Cements are scheduled to announce their results. So, we will see the reaction on Thursday. And in the night, US and UK service PMI for October is scheduled to release. Then coming to Thursday, November 6th, earnings wise, LIC, Cummins, Apollo Hospital, Mankind Pharma, Zydus Life Science, Bajaj Housing, Lupin, NHPC, Godrej Properties, About India, and PNG are the companies scheduled to release their results. So, financial services, pharma, and real estate sectors will be on focus. Macro wise, during our market time, India's October month service PMI is due. In October, the preliminary data fell to 58.8 from 60.9 in September. Here, even though it decreased from September, 58.8 is still very strong number. So, as long as it comes around that level, we don't need to worry. In addition, in the afternoon, UK interest rate decision is due, expecting Bank of England to keep the rate unchanged at 4%. And in the night for US, weekly jobless claims data is scheduled. Finally, for Friday, November 7th, earnings wise, Bajaj Auto, Hindalco, Divi's Lab, Trent, Torrent Pharma, Kalyan Jewellers, Petronet LNG, Nalco, Gujarat Gas, and AstraZeneca are the companies scheduled to release their results. So, auto, metals, pharma, and retail sectors will be on focus. Macro wise, during our market time, India's foreign exchange reserves data for the week ending October 24th is due. In addition, in the night, China's October month exports data are the important things to look out for. So that's all in this video. Hope you got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.